Hello, Warriors. Turnaround Tuesday. Who thinks the dollar is bottom? How you doing, Alexander? How are you, buddy? AJ, Steve, Mike, Paul, Glenn, Blake, came in, Bran, Ryan. Wow, everyone's here. James, Kurt Bell, and everyone. Stel's here too. So let's get to work. Dollar's bouncing back a bit. Is it are we looking at a turn or is this just a reaction? My vote is for now, it's a reaction. That's why you can't get FOMO um, when markets are making new highs, new lows, and I can't miss it. I've been waiting for the collapse in the dollar forever. I can't miss it. And if you're just patient and you're, still a Euro bull, perhaps you're going to have another entry. But, I think there is a possibility, especially cable looks weaker because it was a lower high. So it looks vulnerable to me. And in fact, someone in the room yesterday, we have a very smart crowd, noticed the divergence in Canada and that we're popping a little bit. So let's get to the team. Uh, who thinks I should let Stel take a victory lap over the explosion in precious metals? Give me a why if you think.
I'm not gonna do that.
All right.
That's the only reason why you show up.
Why
Come
you
on.
Okay,
here,
I'll
man?
see you too.
We
I'll come
all
in
know
tomorrow
that,
then.
Stelios.
Huh?
Tomorrow? How's that?
What?
I'll
No,
come in tomorrow. No, I'm
no,
kidding.
it's okay. Well, it was a great call. You've been trading silver well. You've been taking profits on bulges. You've been recommitting on dips. Your conviction never wavered. You deserve a victory lap. So I'm going to turn the charts over to you, and you tell us what to do today to make a lot of money in precious metals from
Okay,
right now. Will you
let me
do that?
take over the screen.
Uh,
Well, now it's tricky. Well, anyway,
oh,
let
now
me.
it's tricky. Now
So
it's tricky.
so yesterday for the ones who are subscribers on our chat room, yesterday evening I said time has come. I'm getting rid of my silver longs from 2310. That was a good. Of course, it took months to work out, but that's like a 50% run, right? So that's not bad at all. I still have longs from 30 to 40, but we're getting close to this 34th 80-ish highs, and I think there will likely be a turnaround, a little dip. I still have longs and I still have a little bit of minor, I still have my platinum, but I like to scale in and scale out. And this is a place where I had said to myself, I'm going to scale out a little bit and see what happens. And if this blows out, to the upside, well, I'll have a smaller position, which is doing very well. So I'm looking for a dip towards the 50 DMA, which is going to be just below 33. We could easily get there. You know how silver works. It's
Yes.
it's mental. It's a complete lunatic. Contrary to gold, which is absolutely rock solid, and any dips are much more shallow and much more uh, quick because everything gets bought straight away. And I also want to take a minute just to say one thing that I was thinking about yesterday. And you know how Donald Trump came into power, and him and Elon Musk, they said, look, we're going to cut government spending, we're going to cut the deficit, we're going to do everything we can. And he has in Elon Musk a guy who knows what he's doing, right? I mean, he's proven it over and over again in multiple companies, and he knows how to run a business. And what's the result? Elon Musk is now out, and the deficit and the debt, not only is it not reducing the pace, it's actually increasing. So I was thinking, if not even Trump and Musk can actually correct this or reduce the deficit, where are we going? I mean, if you look at, USM2 money supply, we had a little bit of a dip because of the QT that's been going on, but I mean, this is just going to keep going and going. We're going to be hitting 37 trillion in debt, total government debt, probably next week or so, or something like that. So for me, the big picture is that all these gold, silver, even cryptos and stock indices and all that, they will all have an upward trajectory until kingdom come. But of course, there's going to be dips. And that's why we've seen for the past 15, 20 years or so, after the global financial crisis, that every dip gets bought. Even when we have major crises like COVID, that was bought straight away. So that, my main long-term scenario is that I want to be long stuff. I want to be long stuff. Obviously, if you're long a particular company, a particular stock, you run the risk that that stock gets, that company gets managed poorly and goes down, goes bankrupt. But if you're looking at indices or real assets, I see no other way other than higher and higher. Of course, that doesn't help you make money today. So, going back to silver, I am looking for a dip in, 32.90. I'm going to put a bid there and see what happens. Gold is trickier because it's not really dipping. It's going to be challenging all-time highs soon. The other thing which I really feel a contrarian is bonds. And this is because as the debt, let's say, of the United States gets bigger and bigger, what does that mean? Well, more supply, right? They need to borrow more. So that theoretically is bearish for bonds and bullish for yields because there's going to be more supply out there. People, the market might not be able to absorb all the extra offering of bonds. I think that as things get worse, yields are going to drop. And that's because A, the economy is going to be doing a lot worse, but B, most importantly, the Federal Reserve is going to step in. I think it's going to happen again. They're going to start buying bonds again. And when the market sees central banks starting to buy bonds, everybody's going to pile in.
I agree, Stel. I think you're onto it. I think the Fed starts in July.
July, maybe it's early, but yeah, you know what? Who knows? But the point is that the governments cannot afford to have high yields for long. That is a fact. So what happens? They're going to come in and they're going to buy whatever needs to get bought. So that's why I think we're going to be going towards the lows here in the yields and possibly, even testing the 360 lows in the 10-year. And also, if you look at the way the market is, it seems like all the fast money is short bonds. So the path of least resistance, I think, is for bonds to go higher and yields to go lower. So that's my humble opinion on this. Of course, I could be wrong. I've been wrong many times in the past.
As far as duration, Stel,
sorry?
as far as duration,
yeah,
the yield curve is steepening. So
yes.
you want to be long closer to the front end, like, everyone watches a 2-year, but the 10-year is as far out as you'd want to go on the curve.
Yeah,
Or
I would
would
look
you
at
go out to 30?
30 is very tricky. I remember I used to be a market maker. I sat next to the bond guys, and anything beyond, I want to say 5 years, but really anything beyond 10 years is purely flow. So the 30-year
Yeah.
can move a lot on no news, on nothing, on fundamentals don't really make a difference. So flow. So I never would want to venture out that far. I would say 5 to 10 years is the part of the curve that I would look at. And
Thank
of
you.
course, the 10 years is the most liquid one. So why
Yeah.
not just concentrate there? Quickly into currencies, the dollar is trying to bounce, but this is what I had drawn a while ago, and I think this is what's going to transpire. I think that we're going to see yields lower and dollar lower, and if you do think that this is going to happen, there's a couple of pairs which are looking really nice. Look at dollar CAD, right on this support line, and
Yeah.
looking to break with the next level 34.5. So you got
Yeah.
quite a few pips, which I think are going to be relatively easy money. Of course, provided nothing major happens with headlines and Trump can say anything on Twitter or on his platform, and then all hell breaks loose. But dollar CAD is one I really like, and the other one which is close is cable. So that
For a
also too is.
sale? For a sale?
No, if you're bearish a dollar, so we're
Oh,
ready to break above.
okay.
Actually, for a sale too. Yeah, I mean, technically, it looks like a nice level where it has to make a decision. You know where you're wrong if if you go short and it breaks out, you know where you're wrong. You give it a few pips, 10, 20 pips, because these are not. You always need to give the trade a little bit of room to breathe, like you say, Dale. But either way, you know where you're wrong if you go short or long here. But I think, my view is bearish dollar for the next, not tomorrow or the day after, but, for the next weeks and, months. And I think these are trades that have potential because they're right on very, very important technical levels.
I like your target. I couldn't find a channel that came in the dollar at that level, so that's a great look. I
It's
see
also a
because
fib, right? It's also the
yeah,
78.
and you just found your return line at the bottom off those two hits from last year. Yeah, that's a beautiful chart. Everyone take a picture of that. So, Sel, people ask me, I'm going to ask you, how do you draw your lines? Like the top line was obvious. How did you find their return line to be parallel?
Oh, this one here, you mean?
Yeah.
Oh, it's just a channel tool. So I just drew that
Oh,
and did that, and it comes in quite nicely with these 2 points. I mean, it's a, I draw badly to answer your question, but I think it kind of makes sense, and it's it
well,
doesn't always
that's a good tip.
transpire, but
It's called a trend tool. What's it called?
no, just a channel on TradingView.
Oh,
The
there.
the parallel channel. There you go.
Oh
It's
my
very, very
gosh.
simple.
That'll save my
Um,
shaky hands some problems. All right.
and last one to close the equities. I still think we're going to be going higher in equities, and this goes in line with the weaker dollar, lower yields, and the fact that also everybody's looking to short equities. So I think the path of least resistance is higher, both in bonds and stocks at the moment. I think we will eventually see like a proper move lower. I don't know what the catalyst is going to be, but for now, if you put a gun to my head, I will buy this and I will buy bonds and I will sell the dollar. So,
Okay. Dollar's bad, by the world.
hey, there
Right?
will come a time when I'm gonna be super bullish the dollar, but not right now. Not
Down
right now.
there, I think you will become
Down
eventually.
there, yes, absolutely. If we get down here in the
4?
95 and a half ish. Oh, no, where is it?
Okay.
94. You're right. Sorry, it's lower.
Yeah.
95. Yeah, I'm gonna
Okay.
get bullish there.
Okay. Great, great overview, Stel.
Thank
So,
you, sir.
really some nice looks. Thank you. I guess I could take the charts, or Blake, if you want to grab them,
I can
your
grab
call.
them, but I know you probably want to talk to K-Man and Ryan. So
Okay.
I'll take them over, but I can navigate as you're chatting.
Okay. All right. Go ahead. So, Ryan, I know that you were looking for 115 in euro. That was your level. We didn't quite get there. It's a lower peak. Are we vulnerable here for a correction? And
Absolutely. Yeah.
okay.
We've been up and down, up and down, up and down. And we've got a ton of trade stuff happening this week. Trump's put this we want your best offer deadline of Wednesday for everyone to put forward whatever they want to put forward for trade deals. We've got
Yeah.
the UK going to meet trade representatives, Europe, Japan. It all possibly might be coming to a head at some point this week. Now, if it's good news, it depends whether it's going to be good news for that country and its currency, or if it's going to be good news for risk and the dollar. So, we're not out of the woods which way this could go. If it's good news for Europe, the question is going to be: do we see the euro falling because it's doing the opposite when it's bad news, or will it be positive and we get a break up to that 115 because everyone thinks that Europe's got a deal going on? So coin flip time again. It's one of those things. We could be at 112 or worse tomorrow evening, or we could be through 115 or worse tomorrow evening.
Okay, let's go to cable. What do you make out of the recent bounce that could be a failing rally? Didn't make new highs here.
Yeah, it's a bit of the same story. I mean, the techs are clear, as you say, up into that 136. We had a go. We couldn't get that high in this rally. So,
right.
Yeah, we're running out of steam a bit again. But it still looks well supported. The dips are still well supported. Anywhere down to that 134.50-ish level. And, look at the trend for the year. That shows absolutely no signs of changing at the moment. So, your levels are pretty clear on that chart, as I think that's Blake showing it at the moment. So
Okay,
yeah.
All right. Euro pound, had that little breakout of the wedge, and it's still holding it. With the pound being a little weaker, not making new highs, do you see more left in the euro pound to the upside? Or are you bearish here?
Well, I'm still sure. I think we talk about lessons and trying to teach traders how to do things the right way, but we still make ricks of
Oh
trades.
yeah.
I
Do
think
what I say. Do what I
yeah.
say, not what I do.
I think
Yeah.
I'm having one of those moments where I need to get a kick up the arse by losing some money, because I'm still short at 84.18, and I thought, close it if we start to hold above 30, and I didn't, and now I'm in that I hope it comes back mode. So yeah,
I know that mode.
We're all been there. Sometimes you have to say, get a slap around the face to give yourself a bit of a wake up. But yeah, it's still looking a bit bullish. Above 84, it's looking bullish. Above 84.30, it's looking even more bullish. But if we're back under 30, then I might get a chance to at least get out of break even.
Yeah, maybe we come back to that breakout and check it again at 83.80.
Absolutely.
That's possible.
Yeah, the big levels at 84.60. I said yesterday, Blake just showed the analysis there. Basic. I said 84.60 is a number, but I'll probably expect to see some resistance 84.50s, and that's what the high's been so far. So yeah, if we get in through 50 later on, we're probably going to attack that 60.
Next time you put one of Ryan's posts up there, give me a little warning so I could turn my black light on.
I'm saving your eyeballs.
So I could, flash back to the 70s. Anyway, thanks, Ryan.
Thanks, mate.
All right, buddy. So, hi, K-Man. How are you this morning, buddy?
Hey, Dale. Hello, everybody.
So getting a little bounce in U.S. dollar yen. Is it just a sympathy bounce with the dollar? Is there anything behind it? And
Yeah,
could it have legs?
UAD are still cautious. I think we're trying to stabilize here a little bit, but the overall theme, I reckon, is still for selling rallies, because I'm still of the opinion that if there's one country going with a trade deal, at least the US should, that is Japan. But UAD has been cautious overnight, and trying to give the government as much time as possible to finally decide what they want to do or be gentle with them. So there is a bit of a balance possible. I think if you look at the overall picture of the dollar yen that we've been trading, is one that bounces have been sold, and the tops are getting all the time a bit lower. So I reckon if we get back to 144, they may already attract a few buyers there. For the rest, my overall bias still hasn't changed for the dollar. I lightened up yesterday, and looking for levels to add again. Just generally speaking.
Okay.
So,
wanted
K-Man, do you think we eventually break 140 in the dollar yen? I mean, I know that's the fast money trade. It's just it's not, the market's not making it easy to happen.
No.
But do you think that eventually happens?
I think, well, I mean, if the US is smart enough to really make the deal with Japan, we should at least have a look below 140. But my ultra long-term view, but that's an ultra long-term view, is that the yen is going to go down the drain whatever happens. But that's a years and years in the making. I think. I mean, I don't know. Maybe when I retire, dollar yen will be at 200 again. But so I'm thinking, like,
you're not retiring.
If we get that deal done, we're going to go below 140. That's what I'm thinking. And then, do we go to 138 or 130? That's going to be the question. But give me 130 and below, I'm going.
Oh, we lost you there, K-Man. You're muted. Yeah.
Am I back?
Yeah, you're back.
Yeah, okay. Because as I said, give me 130 or below, I'm going to buy it. So do I think it can go under 140? Absolutely. I think we can. But then I reckon, yeah, in the ultra long term, yen is doomed, for me at least. Uh,
I'm wondering if the part of the deal, since the president was very upset, I don't know, a month or so, Japanese sold some treasuries,
no,
and they also used it as a threat
yeah.
in when they were going back and forth. If part of the deal is that they agree not to sell treasuries.
Oh, but I mean yeah, that's maybe part of the deal. But look at the opposite, and I've been saying that on the Flow Show again this morning. How stupid would it be from the US not to make a deal, and actually a pretty good deal for Japan. Japan is dying to invest more in the US. I mean,
Yeah,
Nippon.
they just did it with Nippon. I mean, with the
Yeah,
steel
I mean, but
Bethlehem.
it's not only that. They are ready to build, or to build even chips in the US, in the US, if it's needed. And on the other hand, Japan is such a big buffer in the whole Asian zone.
Yeah,
They
right,
would be geopolitically stupid not
right.
to deal with Japan. I'm actually very surprised it hasn't happened yet.
It was supposed to be the easy one.
Exactly. I mean,
So
it was
what's
supposed to
happening
be
with
an
the
absolute
others?
no-brainer. Biggest investor in the US, and
Yeah.
the ideal buffer zone, military, how shall I say, ally in Asia. Come on. I mean, how difficult can it be to make a deal with those people? So okay, that for the end. But even in general, and did I say it over face yesterday? We were the first day of the month, people taking back their positions, dollar getting sold, maybe fresh money, whatever. And then we have to see what happens on day two. And now we are day two, and the dollar is gaining back a little bit. I think there is a chance that we may continue for a bit, but I'm just looking for levels to reinstate what I let go yesterday.
Thanks, Kay.
No problem.
All yours, Blake.
Yeah, I mean, speaking of which, as you pointed out, yesterday was the first day of the month. Equity markets they reciprocated. Remember, we call it Mutual Fund Monday, and it's first day of the month. You got a lot of money getting put to work, and equities. We had a nice recovery yesterday. I mean, and going to Stelios's point earlier, equity markets are very reluctant to sell off, and it's been surprisingly, I mean, surprisingly strong in my opinion, how well bid these equities are. But I do want to reiterate one of Stelios's points with this dollar Canadian. And we were talking about this yesterday, just with actually K-Man in the chat room. This long-term trend line, and I wasn't even looking at it until Stelios, came on. He was noting it. This is a pretty big level, and we do have Canadian jobs report and the Bank of Canada. Actually, we have the Bank of Canada tomorrow, not today. We have the BOC, and with the Bank of Canada, the market's looking at at a potential rate cut, but most analysts are expecting them not to move, but there's still that risk out there they could cut. But if they don't, and then we have a stronger Canadian jobs report, maybe that's the catalyst that drives the dollar CAD lower, and maybe a weaker US. Speaking of which, we do have the JOLTS jobs report later today, and this is. I think we're in that window, and I'd like to get an opinion here with from Ryan, and possibly K-Man as well. We're in that window where we might start to see some of these some of this jobs data show some weakness. Like so in the JOLTS data. Remember, this is job openings. So, what would that look like on weaker number? Would you see less jobs being created and offered right now? And Ryan, is this a month that we should be looking for weaker jobs data to be trading into? What do you think?
We should absolutely be looking for lower jolts numbers, because all we've heard from Fed heads and businesses is that they're not firing, but they're not hiring either. And jolts is basically your vacancies, exactly what it is, job openings. So if people are not looking to take on workers, then you're going to see this number suffering. So it'll be a surprise if it's good news, a big surprise if it's good news out of this. So I'm expecting, maybe something worse than what's expected, 7.1 million, 7.11 million. Most definitely, just based on the information we've had thus far. Obviously, there's still a disparity between job openings and actual people getting fired, which is what we're all waiting to see in the NFP data, which we still won't get, or we still haven't got thus yet. One thing I noted, or Michael Brown noted on the trade-off I did with him yesterday, is that there's a very tight consensus for the NFP. I think it's like 105 to 190,000 from high to low. That feels a bit complacent, if you ask me, given all the risks that we've been talking about recently. So just 85k between top to bottom estimates is quite tight. So if there is a big variation, you're going to see the market moving.
Where will people go if there's a strike on Iran? Will they come back to the dollar or fade the dollar?
Well, good question. Depends who strikes, whether it's the US or Israel.
What if it's both of them? I don't think it could be just Israel.
No,
they don't have the bunker busters.
Yeah, you could possibly see a run to the dollar in that sense. Obviously, the usual suspects will find a bid, yen and Swissy. Oil will obviously ramp up.
Right.
What that does for dollar CAD is another question. Other commodity related countries. But my initial reaction would be perhaps to see the dollar rally, but then the market might go, well, fuck me, he's getting into trade wars now. He's getting into real wars.
Yeah.
This is another reason not to stick your money in the US right now.
Yeah.
So it could flip around after an initial reaction.
Okay, thank you. Nice
Good point.
Put me on the spot with that one, why don't you, Dale?
Huh?
Put me on talking about jobs and then we're talking about war.
Hey, look, I know you can handle the pressure, bro.
Keep me on my
toes.
All
right, so go ahead.
K-Man, what are your thoughts about this week's jobs numbers? I know we have JOLTS today. Anything you're looking for there, but as far as jobs data, is this the month that we start looking for weaker data?
Well, as Ryan already said, we are waiting for it every month. But if we have to believe people much more intelligent, I'm tempted to say, than us, they think the real weight in the jobs market may only come like July, August or so. But we are June. Why not start? But it should show at some stage, right? So far, numbers have really defied all the laws of gravity. So maybe another month, but it is coming. I think it really is coming. But it's been really blind darts trying to stick a date onto it, right?
Yeah, it has, and how many months have we sat here and gone, maybe this is going to be the month, but it's been pretty sticky. I think employers have been very reluctant to let go of people, even though they'll cut their hours, and they'll try to reduce costs otherwise. But finding qualified, skilled workers has been difficult since actually you can go around the COVID timeframe. So employers have really tried to hold on what they got. Hey, real quick, going back to this Canadian, since you and I were discussing in the chat room, do you think there's going to be a breakdown in this dollar CAD? I'm focused on it now a little bit more than I was, just because it's on that trend line, but it's also the 78% retracement of this entire, this is the, oh my God, Canada is going to get killed by the US move. This is, right around the tariff announcements. And that seemed to me, a pretty critical resistance for the dollar Canadian. And it seems like the risk is now that we, trade back down towards 130. What are your thoughts here?
Well, I'm like extremely tiny position for it to happen. So it's not going to hurt. But I think if we break back for a second time, maybe it has to wait for the Bank of Canada also, or even the Canadian jobs report. I don't know. Could be. But if we get a third attempt, it may be going. And I'm looking for a move down into the 134s. If it would happen. But of course, as been said already, we've had many surprises, and I think if it goes back above 138 figure a quarter, we could again be thinking that this was another false attempt, and then we trade back up towards 140 before.
And just notice that this level right here that's held there, two times. There's that trend line that Stelios brought out, but it's also the 127% extension of this last move. So there's a lot of confluence there. So if it does break, there is room, in my opinion. There's a lot of downside room here. If we
Yeah.
do get a breakdown, it could really, accelerate. There's a lot of support that's been holding it up, but yeah, if it breaks, it breaks. And that's one of those things that, like I said, it's on my radar. I don't have a position yet, but it is something that I'm looking to maybe establish moving forward. So maybe something that everybody's looking at come Friday on this jobs
Yeah,
report that we're
I've had
coming
this
into.
line. I've had this line on for a long time as well. I've been talking a long time about this 137, 138 support. And yeah, right now, it's a quick attempt, but let's say it held for now. Huh?
Right, right. Well, guys, I want to thank you all for coming in. Stelios, good to hear your voice, and like Dale said, you deserve that victory lap on silver. I do have to point out though with this silver chart, we had a range break. I mean, we were in this range for April, well, mid-April, all the way till yesterday, and that range extension. By the way, it still goes to $36. That would take us actually to a new trend high, just if we complete this range extension. So I know you already sold yours, but it still looks like it could go. I mean,
I
and if
sold part of it, right? I sold part
oh,
of it,
okay,
not all
all
of it.
right. Well, then the upside target could be, around the 36 level if it continues. But I just want to say, good to hear your voice. K-Man Ryan, thanks for getting us up to speed. I know, Dale, you have your interview coming up. And remember, this market is volatile. We have a lot of volatility, so to take advantage of volatility, if you guys want to talk about, how do you get more funding as a trader, check out the trader funding program. I met with two new trader funding program traders yesterday, one from South Africa. The other one happened to be in Serbia. On two brand new traders to our program. You can get funded immediately if you want, or you can go through a simple one-step assessment. So you want to learn which one's best for you, check out Trader Funding Program. You can find it right on our website. So with that being said, Dale, I know you have Mr. Dave Keller, who I actually met in person for the very first time at the Las Vegas Money Show a few months ago. With I was there with Shy Girl, and Dave's truly a gentleman, somebody that I've been following for many years, a great technician. So, Dale, I'm going to turn it over to you and David.
Okay, thank you, team. Okay, thanks, Stel. Good to
Good, amigo.
always, yeah, always feel free, man, to come in, and we don't have to have big metal rallies. I love your charts, and Ryan, thanks for answering any question I throw at you. All
Thanks,
right,
mate.
man, and thank you, Blake, for starting Forex Analytix, and all the people that we've been able to help over the years. So, Dave Keller, I've known you for a while too. How are you doing today, my trading warrior brother?
I'm good. Good to be back with you, Dale. How are you? Okay?
Yeah, yeah, good to hear your voice. And gosh, Dave, I mean, since the last time we talked, it's almost like there's been a couple of major chapters compressed into a few months. So I'm curious. I mean, it's historic, both the break, more not the percentage, but the velocity both moves, especially the recovery. So, where's your head at here, Dave?
I mean, it has been a volatile year, and even though the VIX has remained fairly low, right, remaining below
Yeah,
20, which is kind of that pain threshold, I would
yeah,
say the emotional volatility for investors is probably at an all-time high. And the biggest change, I was just picking up the end of your conversation there with the previous group, and just I mean the headline risk that we're dealing with, the
yeah,
significance, the severity of moves certainly seems to be accelerated. And the good news, I would say for anyone listening, because I would assume most people are into charting and are into technical analysis and recognize the value of analyzing price behavior. I think there's no better time to focus on price action because that is the ultimate arbiter about where investors' heads are at and where things are headed. So it's been an aggressive move off of the April lows. I would say that the dynamics of certainly the equity markets have changed significantly from kind of early May to early June. Very
yeah,
different environment all of a sudden, right? We had an
yeah,
acceleration off the April lows dominated by growth stocks essentially. And then all of a sudden we have this sort of new phase here with that last I said gasp, but I meant gap, but it's probably a little of both. But this gap higher in early May, that's when one of the many tariff announcements came out about pausing on the tariffs. But from there, it's really been sort of a sideways tape, and the equity markets are sort of in a sit on your hands phase. So I think we're between pretty key levels, and I think the focusing on resistance from mid-May and support at the 200-day moving average. That's kind of the range right now. That range is going to break here pretty soon, and I think the direction of that is going to be the most important signal to look for.
Okay, Dave, you brought up growth stocks. I assume you're talking Mag 7?
Yeah, so
Yeah.
technology, consumer
Okay.
discretionary,
Uh,
the top
that's
three sectors for the last month, sort of those two, and then
for
industrials.
the last 10 years. All right,
For sure,
so
right?
all right, so you would have expected after this decline that there might be a change of leadership, but is that because that's what led the crack to the downside, also leading the recovery to the upside. It's the same game that it was before we even had that 20% sell-off.
I
It's
mean,
like
the
nothing's changed.
expectations were certainly there would be a much bigger leadership rotation, right? And
Yeah,
particularly in the more value sectors. And
yeah,
with the exception of industrials, right? Like defense stocks and others that have actually done quite well, financials not particularly as strong as you'd probably want. And certainly, besides like steel companies starting to rally this week with the news on
yeah.
steel tariffs, very, very little. It's still been growth over value.
Yeah, because the Russell, just for contrast, put up a Russell chart looking at the S&Ps, and you'll see, you've almost had we're almost at new highs in the S&Ps. Maybe we've recovered what, 78% here, Dave, in
Yeah,
the S&Ps, or
yeah.
maybe we're headed towards it's 88 or something. But look at the recovery in the Russell. So I wouldn't be short S&Ps, right? But the Russell um, looks like just a little bit of a correction after a downtrend. So still
This
looks
is one of my
negative to
favorite
me.
charts to illustrate that point. I think that is brilliant, Dale. We've been I think many of us have been waiting for this moment where small caps really start to, exert some sort of leadership role. We are not in that moment yet, to be
Yeah,
clear. And
yeah,
this is a ratio of the small cap ETF, the Russell 2000 ETF versus the S&P. It's
yeah,
obviously been in a consistent downtrend for the last 2 years, but this is just year to date right there.
yeah.
And it's just there's been no significant outperformance at any point. I mean, for about a day or two off of the April 7th low, you had a little
Right.
bit of noise, but that's about it. So it's still large over small, generally speaking, growth over value. Still now
Yeah.
in the last couple of weeks, and that's what I was saying is I think you're starting to see a bit of a change where in the last couple of weeks you are seeing a bit of a rotation, and I think that's one of the most important signals to look for. If conditions are great and if the markets are nothing to worry about on the equity side, defensive sectors should not be doing well, right? They should be underperforming. We saw that from April 7th down to, second week in May. So this is
Yeah.
utilities, healthcare, consumer staples,
Yeah.
and real estate. If you look in the last 2 weeks, right, going from mid-May to now early June, they're certainly not underperforming anymore. They're actually starting to stabilize a little bit. I think it's a little too early to say defensive stocks are great spots at this moment, but it's definitely changing. And so I think just in the last couple of weeks, we've seen the market rally such a significant degree, and that last gap in the S&P, we've stalled out since then. And I think the
Yeah.
danger sign would be defensive sector starting to improve. If that would happen, I would be playing more the short side on equities. But for now, I think it's a little too early.
Okay. That's really an interesting point, David. And I'm thinking about, where the performance could be on the outside. You like oil shares, natural gas shares in this environment? Are they starting to show some potential for a run?
Yeah, so it's really interesting. Let me switch to the right chart here. I think with sort of traditional areas of the energy space, right? Infrastructure or not infrastructure, integrateds and
Yeah.
oil producers, they haven't been particularly strong, and it's really
No.
been because of the weakness in crude oil, right?
Right.
But crude oil prices maybe a double bottom through the course of
Yeah.
2025 potentially breaking higher. I'd still like to see a little bit more before I think it's a believable move. This is the
Okay.
XOP, which kind of plays on that traditional energy theme. Similar to the S&P, a gap higher. It's kind of pulled back to test the lower end of gap support. It's not bad. I think the areas of the energy sector that are the biggest opportunities, it's infrastructure names, it's pipelines, it's natural gas.
Yeah.
That's definitely where the strength has been from a technical perspective. Charts like Williams are really close to looking like exceptionally strong breakouts. What we call a big base breakout, which is when you have a
Yeah.
sideways consolidation period for an extended period of time, and then you finally break to a new high. It's usually one of those indications that a lot of institutions would look for as an opportunity to sort of add to positions. It's very close to that. And so the strength you're seeing is not in, Exxon, Chevron kind of names.
Right.
It's infrastructure, it's natural gas. Those continue to be, and alternate energy like nuclear is gonna bounce
Yeah.
today with the deal with Meta.
Yeah. So, and natural gas is the bridge to nuclear. And I'm more of a kind of pure chartist, but I do like the fundamental story that electricity demand isn't going down, especially once AI kicks in with all their centers. And since nuclear won't be ready, nat gas is going to be the beneficiary. And I could almost make a case for $10 on the Widowmaker on natural gas. That this we had a big rally last year, if you pull it up, and then we've been pulling back for about 6 months, and looks like we're getting ready to go again. See what I mean?
Yeah, this is the UNG that I'm bringing up
Yeah,
to
yeah,
sort of show that. And you're absolutely right. And what you have to remember, and I think it's really tough in a year where headlines and
yeah,
and tariff announcements and geopolitical risk are causing day-to-day, severe fluctuations. But if you take a step back and think about longer themes, think about what doesn't change through this period. The fact that generative AI and crypto
yeah,
mining and all these other
yeah,
things that are definitely not going away tomorrow and certainly are happening more and more, all require an incredible amount of energy. And that
yeah,
that should be a great tailwind for utility companies. That should be a great tailwind for nuclear, uranium names, and the NLR was an ETF that I had up a moment ago, just playing on that theme. And again, infrastructure names, right? I mean, it's just the energy requirements are pretty staggering if you look into the details. So I like when, to your point, Dale, I'm a chart-oriented investor for sure. When the macro themes sort of back up
yeah.
a constructive chart, that just gives you more validation to that approach.
When they could marry and not get divorced.
That's right. That's right.
All right.
I like that.
Anyway, I'm sorry I'm flashing back. Anyway, how about all the confusion in rates? There are a lot of people talking about that we're going to break through that 475 on the 10-year, and the bonds made new high yields. after the Moody downgrade. I'm conflicted. I feel like, especially on TLT, kind of late to get too bearish here, although I think there could be another low. Um, what's your take on rates? Are we peaking up here, or are we going to have a continuation move like a lot of the interest rate bulls looking for higher rates are talking about?
Yeah, so I think a lot of this could depend. I mean, there's a lot of things at work here. I mean, I think part of this certainly could depend on the equity chart that we started with, right? I mean, if the S&P starts to
Yeah,
break down, there's going to be a
yeah,
bigger appetite for Treasury bonds than we've probably
yeah,
seen in a little while. We've seen rates sell off, or we've seen rates increase as bonds has sold off since the April 7th. So there's sort of the April 7th equity market low. And then from there, we can see rates have been trending higher. So the TLT and Treasury bond prices have been trending lower, sort of inversely to what we see with stocks. I'm watching a trend line on the 10-year yield, and you can see a similar downtrend line on the TLT coming off of
yeah,
that April peak. And we're right at the lower end of that line. And so we're right. I mean, this is one of those times. Sometimes charts are not at an actionable point, and it's sort of a let's just see how it evolves. This is
right.
kind of right at that crucial moment where either this is a pullback in rates before the next big move higher, which would mean that bonds are selling off, which probably means stocks are rallying in that scenario, would be my guess.
Yeah,
And the fact that rates have gone up really, I mean, honestly, it suggests a number of things, but I think it starts to suggest economic optimism
yeah.
that
No recession. Price out all the recession talk.
yeah, we're kind of back to pricing out perfection. And I feel like there was a wake-up call in the markets here earlier this year, right? And the tariffs
Yeah,
kind of came in, mid-move here, right? I mean, rates had already been coming down pretty quickly before that first tariff announcement. But now we're sort of right back to, things are going to be great. And I think, to be honest with you, I'm skeptical that it's going to be that great, which means for me, I'm waiting for like that next shoe to drop with rates coming down. But as a technician, I'm watching trendline support. I'm seeing it hold right now. So for now, I think rates are in an uptrend until proven otherwise. I think bonds are in a downtrend. I wouldn't be surprised if like a breakdown, if you do get that breakdown in the S&P, which I'm not seeing yet, but if that would happen, I would expect that this chart starts to evolve pretty quickly. And most likely, you see bonds rotate higher in a safety trade, and you see rates break that trend line. But it's holding for now.
okay. And there are some pretty smart people that think that the April lows are going to be taken out in the S&P. I don't see it right now. I don't know. They have monthly signals. You think that April low is in there, and we're going to see, maybe S&P's at least new record highs before we can even think about the April lows again?
I mean, so we're a lot closer to the February peak than we are to the April low, and
That's
what
for
we now
sure.
right, and what we now have to remember is I also think and again, not to get too political, but I would say we've now, and certainly the administration has now seen the pain that happens and how that can be reversed, and so there's the Trump put all of a sudden that I think we have to probably assume is going to come in here. I don't see a scenario where the market just rips below the April low and keeps going without someone stepping in and making an aggressive change to policy that would cause that to bounce higher, would be my guess. From a technical perspective, again, I'm kind of thinking of it as a stoplight right now, right? And so we're in
Yeah,
the green light phase above 5750. I think below 5750 down to probably 5500, which is a horizontal line
big
there.
area. Yeah,
That's where I think it's neutral, and that's where I think you would find a lot of institutions taking off some of the bets that they've been making during this period because you're starting to wonder whether that's going to hold. Below 5,500, I'm just out, and I'm
yeah,
avoiding, and I'm just waiting. And again, I wouldn't be surprised if an April low would hold. If we do get down to that level, I think
yeah.
a Trump put comes in pretty quickly.
Okay, so you talk about institutions taking profits. The narrative I've been hearing at this whole rally has been retail, and
Hmm.
institutions got flat. They're flat. Were flat-footed, and skeptical, and they didn't get in, and they have there's a lot of fuel, but they also have the power that if they want to get in to generate a decline so that they could get in at better levels. They're not going to get in at the April lows, but you know, some of those gaps that you talk about
Yeah.
could be a possibility. So are you saying the institutions were also on this? It wasn't just a retail rally?
I
Because you
mean,
hear things,
I
you
mean,
never
I
know.
think to a degree, and I think the challenge now is, again, depending on what kind of institution we're talking about, you have to be thinking about the longer term risk versus reward, and that's where I
The,
think things are a little more concerning here.
we're talking
Um,
about the institution I had to stay at for a few months after I blew up an account.
okay, that one. Okay, got it. No, I think to a degree, right? And I think the severity, I mean, I think where everyone kind of got caught off guard was just the severity of the rally off of the April low. It's a really tough period to navigate. And
Yeah,
the world is filled with people that claim that they picked April 7th as the date of a low. But I will tell you, having navigated a lot of these moves, it's really hard and probably a fool's errand to try to pinpoint it. So your
yeah,
question is whether you're buying into a falling knife scenario or
yeah.
whether you're waiting for some sort of confirmation. I think during this period is where if you're skeptical as an institutional investor, if you're skeptical, at some point there's a career risk with not participating in that upswing.
Okay.
And I would say the fact that, names like Meta and others are doing what they're doing, kind of breaking out of this consolidation phase, you have to own those names, if you want any opportunity to outperform the S&P 500. So I think that's what fuels growth stocks rallying so quickly. What's happened though, but again, what's different now is we're seeing the dynamics change, right? The dynamics were a certain feel off the April low to mid-May. This last gasp above the 200-day. I mean, the S&P above the 200-day has looked very, very different by every measure, right? The breadth measures that were so strong coming off the
Oh,
April
yeah,
low, everything's rally.
yeah,
Breadth, at least short-term breadth, all coming down. So here's the McClellan oscillator, which popped below zero. And that's very different, right? So here's the McClellan oscillator is a short-term measure of breadth, right? Looking at the slope of
yeah,
the advanced decline data.
yeah.
Very negative at the April low, goes back positive about a week later, flips negative about 2 weeks ago. And so this is where those defensive sectors that I showed you start to improve. So I think the dynamics are changing a little bit. And now it's sort of wait and see mode. I think a lot of investors sort of sitting on their hands and waiting, which means we're one big kind of catalyst away from this market shifting again. And that's why I'm focusing on the charts that kind of help you identify that new impulse move is happening.
Okay, so there was a theme after the tariffs became a reality that let's buy stocks that aren't affected by tariffs.
Hmm.
Okay, so they piled into things like Uber. All right, and I looked at Uber on the weekly, and it looked to me like we had a three drive to a top formation up there.
Yeah.
There's one, two, three. Divergence pretty good. We had a down week 2 weeks ago, and I think this is a potentially bearish situation in Uber because if we're going back to the same old game of Mag 7s, the reason people piled into Uber because they were worried about tariffs, and if people aren't anymore, and going back to NVIDIA, Uber may lose some of that flow. So I actually think it's pretty vulnerable. I'm wrong over 94, but I think we could see, where people see where they started coming in April 2nd.
Yeah.
They bought it, tariffs didn't bother them. So that's something. And also Google, Dave, there's a lot of real great fundamentals in Google, but this retracement is one of the weakest
Yeah.
that we've had in the Mag 7. It almost looks like a bear flag, this whole recovery from April on
Yeah.
the daily to me.
Yeah. No, there are a number of really good points you made in there, Dale, and I would agree, right? I mean, starting with Alphabet, I think that what you have to remember is this is one of the weakest of the Mag 7 kind of basket of names, right? For every
Yeah,
Meta breaking out, or I mean, Netflix, if you group that, is probably the strongest one breaking to new highs. But
that
Alphabet's
looks
been
heavy
very,
to me.
what's that?
Netflix is diverging all over the place. I wouldn't be long
Yeah.
Netflix up here.
Yeah. So Netflix has had, probably the best run out of them
Yeah,
all. I
yeah,
think with charts like Alphabet, I think what's really telling is look at the day when we gapped above the 200 day, and this
yeah,
is just a screaming shooting star candle, right? So
yeah,
think about what happens, right? We open above the 200 day for the first time in like 3 months. We trade up to like 177, but then we close right back at the 200 day, and we
yeah,
haven't touched that level yet. So again, that's when I talk about the dynamic shifting, the sentiment kind of here was, all right, it's back, step on the accelerator, we're breaking higher. The last couple weeks have been, okay, that's a little too far, too fast. And
yeah.
so the question is whether this is just a time correction, which so far it's been, right? We haven't lost a
Right,
lot of ground on charts like Alphabet. We're still kind of,
right,
in, a couple dollars of where we were,
right.
but we're not going up anymore, right? So it's definitely changing. So I think if you're able to clear that candle, that's when things look like we're reverting back to an upswing. If Uber pushes above 94, as you mentioned, which I think is a great way to just think about that chart. By the way, there's a lot of little wisdom there in there, Dale. As always, what you basically said is I'm maybe playing the short side, but if it breaks above 94, I'm wrong. And I
Yeah,
think too many traders go into a trade like this assuming that they're right and not thinking about the exit strategy. And I think you articulated it perfectly, which is I'm going to go in this, and then for a brief moment, I'm going to assume I'm dead wrong. And what is that going to look like? And let me
yeah,
make sure that I clearly define that.
yeah,
So I think that's right. So I think you've seen pullbacks in names like Uber, which were sort of darlings coming out of the April
yeah.
low, right? Immune to
Right.
tariffs, making new highs for the year, but now pulling back quite a bit. But now they've had their pullback, right? Alphabet stalled out, and so I think that's where this next move is going to be
Yeah.
crucial.
Well,
Alphabet's
I'm gonna
not
I'm
far from looking like a pretty ugly chart.
yeah, and this I'd sell a rip. We broke about 12.
Yeah,
So, I'm looking to sell at around 88 to 90 again. And then
yeah,
that's a even tighter risk than doing
yeah.
it down here.
Yeah,
Uh,
and that's that this chart. I mean, think about how bad this chart is. If you have that short rally and then a quick rally, and then people do what you're suggesting, and all of a sudden you're breaking down. It looks like a Head and Shoulders top. Like there are a number of charts that look kind of like that right now,
yeah.
on names like Uber, and so the visuals on the market could change pretty aggressively. It wouldn't take much.
Okay, well, everyone, if you're interested in a steady, uh, great demeanor, elite knowledge of technical analysis. You have to find a way to keep in touch with David's work. You could find him on X at D Keller CMT, right, Dave? And Market Misbehavior, is that the name of your website?
That's right. Yeah,
You want to show it?
I appreciate
Pull it
that,
up.
Dale.
Yeah, pull it up. Okay, so there he is, and you could find Dave on X. He does a lot of spaces on X, and a lot of people are paying attention to what he does. And he's one of the calmest technical guys and that I've ever met in my long storied career. And every time I get together with you, Dave, I glean something. You confirm something for me, or you open my eyes to something new. So um, it was great to have you again here, David, my trading warrior brother. Really great,
No, pleasure
great
as
interview.
always, Dale. Hang in there, trade safely, and we'll talk again soon.
Okay, Dave. Dave Keller, everyone. Check him out on X. Go to his website and check him out when he's online doing the spaces. A lot of people are. So you're very welcome, everyone. And that's a wrap. Thank you, David. Remember, don't just count your candlesticks, count your blessings. Have a great turnaround Tuesday. See you tomorrow. Adios. You're welcome. You're welcome. You're welcome. You're very, very, very welcome.